Hey everyone, we just got the closing bell for Thursday, June 13th. We were expecting a very quiet day earlier this morning. I said, hey, we're probably going to trade in a 4 point range based on what we did yesterday. And that's exactly what happened. We traded in the same 4 point range as yesterday, actually. And you can see that we're closing pretty much, or we did close pretty much at the same level. Well, no, let's see. That last bar brought us back down, but still pretty much the same level that we opened up at and right on this purple line right here. So the close is just 0.19% higher than yesterday. So we're just chopping sideways. We had that gap on the CPI, the FOMC announcement that did nothing, the PPI that did nothing because everything was already priced in. So where do we go from here? Well, volume is very low once again, far below the average. We've got 31.3 million. That'll get revised up maybe 10 or 15 million. And that will take us to about 45 million on a 58 million average, which is already really low because of how long we've been below average. And so that really does show us that what I was saying about yesterday's volume being up only because of algorithmic trading, then that's pretty much, this confirms it, because we didn't get the same amount of volume that we got yesterday. Institutions still have not come into this market. So hopefully they'll come in tomorrow after that consumer sentiment report, but we might have to wait until next week. Until the volume comes back, we're really just not going to expect to move higher or lower. We're just going to keep on chopping sideways. So let's take a look at our TLT, our VIX, maybe our sectors. TLT continue to move up. That's a little surprising. That means that this is probably going higher. The probability, yeah, so this morning was 10%. Now it's at 12, over 12%. So this is getting really irrational. And that trade that we did earlier, that example trade, is just looking better. I mean, if we liked it at the 1, 2, and 3 entries, then we would like it, or sorry, it was, where was it? It was 1, 2, 3. And we would like it even more now. But this may not be done going up yet, so I wouldn't enter quite yet. We're sort of in, looks like we might be hitting a resistance point. Yeah, we're right in the middle of that resistance. So if I see it bouncing back down from here, then that would be a signal for entry or re-entry. So still liking that TLT trade. It's probably the most high conviction trade that we have going on right now that we can see in the markets. Let's look at VIX. The VIX is pretty low. Actually, another high conviction trade would be a 1 to 2 month expiration VIX call, but you would manage that very closely because we're not thinking necessarily that we're going to go screaming higher. It would only be up to 13, 14, 15. So you wouldn't want time decay to get away from you. That you would want to take profits as soon as you had it. So for example, if tomorrow we bounce right back up to 13, then, and you were able to get in at 12, then I would take that profit. Or if it bounces over a couple of days, is able to trace up to 13 to 15, then I would definitely be taking those profits right away. I wouldn't be waiting the 1 or 2 months hoping that it would go even higher. So with that low volatility, here's what it's actually starting to look like. The S&P 500, we're in June, we're at the beginning of the summer. We had a lot of, all the schools let out, not all, but most schools let out last week. So we have vacations and summer vacations. Generally speaking, the volume is lower during summers, but not this far below the average. Yeah, this average has crept lower, but maybe we'd expect to hit that 60 million for most of the summer. And the volatility could be lessened during the summer as well, and makes really good income trades. It's a good time for income trades and verticals. iron condors, things like that. But we have to be careful that we don't get whipsawed by ATR. Now, if ATR just, or not, yeah, ATR, but also VIX. If VIX just stays below 15, 14 and a half, 15, then we'll be fine. We won't get a dramatic increase in the ATR and be threatened in those types of trades. But if it does start pulling higher, then you've got some volatility risk going in on spreads, especially iron condors. So just be careful if you decide to adopt that during the summer. It could be a great way because it'll be difficult to make money directionally if otherwise. If you're doing singles, then the way that you would combat that is you'd be looking for short-term trades, very short movements, and you would keep your expiration short, and you would take profits when you get those expirations, or you could let your options expire, and then whatever gain that you have is what you have. To reduce your risk, though, you'd go further in the money. For example, 1% extrinsic style trades would be suitable for that type of strategy, except instead of going out a month or a month and a half, you're only going out 1 or 2 weeks. And then you're allowing it to expire because you're buying so little extrinsic value that the stock only has to move a little bit in order to get your break even. And then anything that it moves beyond that is what you make is, and then whatever that move happens to be as a percentage of what you paid for your option, the intrinsic value that you paid for your option, that's your gain. That's your percentage gain. So sometimes you can get really nice 1, 2, 300% gains that way. Or if not that, then 20, 30, 40% if your stock just moved a tiny bit. So those are appropriate probably for this summer. And in my programs, you're probably seeing me start to trade that way. For example, we did a DocuSign trade that was put on 2 days ago, or yesterday, I think it was. Let me just double check. I don't want to misspeak. In our, that's weird. Why is the trades not showing up? Huh. We should have a DocuSign trade. I know we traded it. I'm pretty sure it was yesterday. If it wasn't yesterday, it was the day before. And so I think it was probably yesterday. We probably caught this perfectly, and then a little bit more today. And that, as of close right now, that trade is up nearly 100%, 98.5 is what I'm seeing. So even on a tiny move like this, because the expiration is so short, you're able to get really outsized gains. So you're going to see me start looking at a lot more trades like that for the summer, because it does look like we may be just chopping around for a while. I still do believe in a pullback, maybe not necessarily a correction, but even if we pull back, that's still within this box. That's still considered choppy action, choppy movement. So getting those types of strategies that allow you to make outsized gains relative to very small moves or choppy movement, that's what this summer is probably going to be all about. We're not going to expect super high trending stocks or markets. Let's take a look at our sectors. Yeah, it won't be, we said everything we're going to say about the momentum. You see the RSP, we already made emphasize everything that was going on this morning and yesterday. So let's just take a look at our sectors, and then that'll be it, since basically we just chopped sideways and did nothing, and we're waiting for a new catalyst in the market. So 79, there we go. Actually, let's take a quick look at what's expected for the consumer sentiment report. So consensus is that the consumer is going to be more enthusiastic. That's kind of interesting that they would, I don't know if when I talk to people right now, they don't seem to feel more enthusiastic. But it's really, are they spending and are they buying? Like for me, like people are still complaining about high food prices and the gasoline that they're paying and how before COVID, I was just talking to an electrician yesterday, and he was telling me that he could get a roll of wire, a certain type of wire, for $40 before COVID, and then after COVID, it was like $120, but right now it's still $100. So yeah, it came down, but he's still paying more than double than when he had what he had to pay right before COVID. So people are still hurting, and it's not like their incomes have gone up proportionally. He told me that his hourly rate has gone up from $75 to $80. Right? So he's able to raise his his rates $5 an hour, but his baseline materials costs have gone up 250%. That's kind of that doesn't help. So I'm surprised that the consensus is still at 74%, that the sentiment is positive. Let's look over here. Sentiment. So previously we were at 69.81. And so I guess forecasting, the analysts who follow this are expecting that, yes, the consumer does feel better about the economy and is more willing to spend. I don't know. We might get it. I mean, I could be completely wrong because I don't study these reports, but just based on anecdotal and evidence and the people that I'm in touch with, it doesn't seem like we have that type of sentiment going on, that positive sentiment. So that might be a surprise tomorrow morning. We'll see. And if it is a surprise to the downside, then we're going to get a sell-off in the market. Not necessarily a huge sell-off, not like we're going to, oh my gosh, we're going to crash, but pull back to the EMA 8, top of the box, maybe into the EMA 20. That's a possibility. So let's take a look at strong and weak sectors. Before I do that, might as well, because it's right here and super easy. 127 90-day highs, 116 90-day lows, pretty even. So this is just confirming the chop and that we don't really have good momentum to the upside or to the downside, actually, right now. So sectors, we're probably just going to see continued interest in the tech and not much else. But what we want to see then is individually in the subsectors of tech, are we losing interest because it used to be SMH and communications? Are we losing interest in communications, for example? Because I don't think it's happening in SMH. But if we are, then that's another sign of weakening inside the market. So we see that XLK generally is up. SMH is up along with it. Home builders up because of the interest rates, because treasuries went up. And then we've got QQQ up along with XLK, and then communications is down. You see that it went down. So what I now need to see is, I don't get any more, at least not on an ETF level. I can't get that much more granular. I'll look into specifically XLK in just a few moments. S&P, retail sideways, silver down, financials down, choppy sideways, but kind of down. Industrials choppy sideways, gold a little bit down, but holding that support. Defense pulling back, but it looks like it could still go up. Small caps sideways, utilities weakening, healthcare weakening. It looks like it peaked out, little double peak right there. Materials sideways, Dow Jones sideways to a little bit down. Consumer staples pulled back, might go higher. And then the consumer discretionary up a little bit, but for the most part sideways. Real estate up a little bit, for most part sideways, but also being helped by those interest rates. Energy's down, getting to that MA50 level. It's getting to a critical support. If it breaks that, then it's not looking good for the energy sector at all. TLT up, we already talked about that. So nothing looking really interesting. So I do want to dig a little bit more granularly into tech. And let's do this. And then okay, and just make sure I have a sector and industry. Okay. So let's look just in terms of strength. This is semiconductor, hardware, semiconductor, hardware. First, I don't know why First Solar is in here. Hardware, semiconductors, and hardware, semiconductors, hardware, semiconductors, hardware, Seagate hardware. They say services, unless they changed. I know Seagate back from the 90s, so I could be out of date. Yeah, hard disk drives, hardware. Okay. So, I don't know why FICO is in here. That's weird. So it looks like all at the top, it's all tech and hardware. I'm sorry, it's all semiconductors and hardware. So not broad-based at all. And if we saw that sell-off in the communication sectors, that means we really are just being propped up by a very, very small number of stocks now. It's getting a little dangerous. Let's take a look at that heat map. Is this up to date? Yeah. So AVGO Broadcom. So that was a semiconductor and hardware. And then NVIDIA, the AVGO Broadcom, they're calling it the second best positioned AI company right now. I'm not sure what they're doing in AI, but that's just what the analysts are calling it right now. There's like NVIDIA's number one and Broadcom's number two. They had earnings, so that's probably why they're up so much. So if we had just removed AVGO, the only thing that's really bright is NVIDIA and Tesla. Tesla was off of news from Elon Musk getting paid. And then NVIDIA probably in sympathy with AVGO. So that's really the only strength. Everything's kind of like this pale green, 1%, 2%. We do have Chipotle right here, up 3%, but they're not a huge market share. And I'm pretty sure they announced a stock split as well. That's probably what, yeah, I see they have a stock split coming up. So this is all kind of artificially propped up. Nothing is looking really great in this market right now, but the standouts are obviously the two semiconductors right here. And that is what is making it look like we're a little bit higher on the market today. So again, I just don't believe that we're just heading significantly higher. Chop around a little bit, pull back, and then we'll see. Maybe the story is different. But until then, and until volume comes back, we're really just going to expect choppiness. And that choppiness might last through the entire summer. After the summer, we'll get started, we'll get geared up for the election cycle. And then we'll see a lot of volatility come into the market. Okay, so hopefully we do see some volume and some action tomorrow after the consumer sentiment report. But until then, we're just going to be waiting. I just see what time that report comes out. 10 a.m. So after the market opens. So definitely tomorrow morning, I would just be sitting and watching for the first half hour, see what happens with that consumer sentiment report, and then decide what I'm going to do with my portfolios then. Okay. Well, that's it for today. Have a wonderful rest of your day, and I will see you tomorrow morning.